Hey everybody, Matt Johnston here, and I did another video, a previous video where we talked about setting up a virtual business and some of the basic registration concerns that people may have if you're going to set up a virtual business. There are other things that that virtual business owners need to be aware of, and that is going to be your liability, or potential liability rather, and taxation. So your potential liabilities for a virtual business are going to depend heavily upon the nature of your business. If you are doing coaching or consulting, you're probably going to need a kind of errors and omissions insurance. It's kind of like a malpractice insurance. You should speak to an insurance broker about that and what those things would cost. Those things are generally going to be based upon the nature of the business and how much of the business is virtual, how much of it is going to be based upon expertise, how much of it is going to be provided by somebody who may be licensed. So those kinds of questions are something that you're going to speak to an insurance broker about to figure out what those things are going to be. The other thing that I do want to talk about is taxes. So a few years ago, the Supreme Court issued a decision which said that states can tax businesses that send a certain amount of business or transact a certain amount of business in their state, even if that business is not located in that state. So it's an intrastate commerce taxation. And generally what that looks like is generally sales taxes. So the situation was that some businesses, particularly large businesses, were transacting a very high level of activity within a state, but because the business was located in a state, for example, Nevada or Delaware, where there's no state income tax, or the income taxes in those states for corporations is very, very low, they were choosing those states and they were delivering goods to other states and not having to pay sales tax. Well, that's essentially what it boils down to. There's another little tweak in that the individual who was buying it was supposed to pay the sales tax to the state, but nobody ever does that. So the Supreme Court said that the South Dakota law that was in question was constitutional because it regulated intrastate rather than interstate commerce. Many states are now looking at that, and as we exist in a COVID-19 world, and more commerce is being driven online, many states are going to start looking at that as a way to enhance their revenue, particularly when businesses are located outside the state, but they're transacting heavily within the state. So you are going to have to be mindful. Now, if you're just sending 1 or 2 shipments a year or low-cost shipments to customers in other states, you're not going to be captured by these laws. But the larger you get, or the more you ship to a particular state, the more you may be liable for these payments of these sales taxes. So you're going to have to be mindful of that. If you are selling physical products through, say, Etsy or Amazon or something like that, those large platforms do help sellers manage and track their sales tax obligations, and the programs are in place to make that happen. But if you're doing it independently, you are going to have to be mindful. There are now some services in some states that are taxed, and even if you deliver them virtually from one state to the other, they may still be subject to that tax, a sales tax on the service. And again, as state legislatures start looking around for more money, I suspect that we are going to be seeing more of those the taxation of those kinds of transactions. I think they're going to become a little bit more frequent. So you do have to be mindful of who your customers are, where you're delivering your goods and services, so that you can track those tax obligations. And finally, you need to be mindful of potential registration in other states as what is referred to as a foreign entity. A foreign entity is a business that is registered and formed in another state, but happens to be operating in another state. So let's say you are a foreign business that was registered in the state of Pennsylvania or the Commonwealth of Pennsylvania, but your main headquarters happens to be in Maryland. You have to register in Maryland as a foreign entity, and you have to maintain good standing in Pennsylvania, and you have to maintain good standing in Maryland. And you may be required to submit annual reports and pay annual fees every year based upon those two different locations. And businesses can be formed and registered in one state and then be an authorized entity or a foreign entity doing business in many other states, including all 50 states or just a select few of states. So you do need to check with counsel, with your attorney, to make sure that you are properly registered. It's not just simply being in another state. If you exceed a certain level of activity, you may be required also to register in those states. In the meantime, if you have any questions about setting up a virtual business or operating a virtual business, please give us a call. We are happy to do so. We offer specials, flat fee, organizational flat fee program, a product that we offer that we will get you registered in your state of choice. We will get your EIN number for the IRS, prepare basic documents, and be available for consultation. We do that as a flat $750 fee. If you want more information, you should check out our website at mattthelawyer.com, and you can get more information on that. In the meantime, hey, it'd be really helpful if you could click that subscribe button that's down below, and so you can get these videos. And in the meantime, everybody stay safe out there. We'll talk to you later. Bye-bye.